I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Markets around the world are mixed. China's private sector shows decent growth, but Europe is a little soft. The Fed will continue to accommodate, but its pace of purchase might change. Can this market continue to hold higher? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are basically flat now this morning after the S&P snapped a 3-day losing streak following the Fed's reassurance that it would keep supporting the economy. It's been a week full of news from Cyprus to now the Fed. So how do you think the market is holding in?
I think overall better than people would have thought. I even think like bulls who are constructive on higher prices were pretty impressed by the type of action we've seen. We've been holding in there, we've been holding higher. After 3 down days, I know that everyone was saying, oh, we had the first 3 down days in a while, but literally it was maybe 20 handles off the highs and we held above the 21-day moving average. So with all the headlines out there, I would say the market took it in stride. So that would be like the thesis, in stride for now.
Okay, and show us the levels that you're paying attention to at the S&P, what we should watch for today.
Well, talking time frames, it's important to see which types of levels. And short term, where we're even okay. You look at the chart here, and you will see, let's just take a little trip down memory lane. Let's just go back to last summer. Last summer, when we put that low in, we had this gradual uptrend all the way into September that got a little faulty. So when it got faulty up here, you wanted to pay a little attention. And we didn't hit a high and just sell off. It was a little bit erratic for a good 6 weeks before we had a 7% pullback or so. And then from here, this was at November 16th low, where we came right back up to this trend line here, and then the fiscal cliff happened. This one, we pulled back, but we pulled back to the trend line. We didn't pull back as fast and furious as we did here, and then reverse. This was the start of the year. Then we digested above this downtrend, and boom, we continued. Right around here is when people started getting concerned because we had this accelerated uptrend. Not like the gradual one we had here, or not like the gradual trend line that we have here, but the accelerated one, which is something that I typically follow a bit closer. So when we broke the 8-day, it made some sense to lighten up, maybe look a little net short, whatever. You had this engulfing bar that led to nothing, a reversal. Then we reversed, held higher, broke above 1530. So now you want to talk about this new accelerated uptrend. Look at these 3 days. These 3 days weren't even as harsh as what you saw here or as wide. So the question now is, can we make new highs in the year? Can we make historic highs? At this particular point, what we have yesterday's low, which was 1548, and then you have an important pivot here at 1538 above the 21-day. The longer we stay above both of these areas, the higher the probability at some point we take out this 1558 to 1563 and continue. But for right now, I would still say a little less is more, and there are some stocks that could be short and some you could be long, and there's a lot of divergences among sectors.
Right. A healthy sign for the market yesterday was the Homebuilders, which broke out to new highs. Housing sector stocks ranked among the best performers of the day, and this is one of the groups that was fastest to recover from the pullback in February. Even the XHB got a nice breakout yesterday.
Yep, 2013 highs. So that group, if you were paying attention to relative strength and you saw Lennar's earnings, you got paid for being long here. But the only, the thing is, though, it's one of the only groups that broke into 2013 highs. I would say earlier in the year when the Homebuilders broke out into new highs, or even last year, there were like 2 or 3 other groups that were alongside. I was looking around and I don't see that. You look at the XHB, shows you right place, right time. First of all, this is also a lesson on getting back involved. Because on this little accelerated trend line, okay, if you were a macro investor and said, oh my goodness, we're breaking this, I got to get out, and you got out, okay, you were feeling pretty good as it broke the 50-day. But then what happened once it regrouped and held bigger support that started the year and turned higher? If you didn't get back in here or get back in here, you are now not in the home builders for new highs. So that's why it's very important to talk time frames. So overall, this gave us some clues of that little pullback during the Italian election cycle. But as of right now, it's at 2013 highs and it's showing a lot of health.
Well, you mentioned Lennar's earnings. Lennar reported quarterly profit yesterday well above analyst expectations. The stock rallied, closed up nearly 5%. So does it need a little bit of a breather after that move?
Well, yesterday was a day to be in a lot of these. Now the question is just how much of yesterday's gain can it hold? Is it a breakout failure, which would give us some signs that this isn't a real move through 2013 highs, or is it a breakout and then it's going to get follow through? So if you look right here, you will see, here is your nice upper range when it snapped back. Okay, this is when traders had it on their radar or whatnot. It got above the 8-day, the 21-day, and then it broke above this trend line. So I would say for this to be valid and help give us some support that the home builders are going to continue its up move, you would want to see it hold above this area, at least 50% of yesterday's bar, and then go. If it were to open down today with the futures and gets above yesterday's high of 43.90, then perhaps you get another day too. So let's see if this move is real. Let's see how much of yesterday it holds and if it could even get through yesterday's high.
Right, and lots of those names did do well. D.R. Horton rallied as well. This stock was highlighted and off the charts last Thursday as a potential breakout above 24.58 and went as high as 25.56, making a new high.
Yep, shows you that when we put charts on off the charts, it's because it's a reason. And it was looking for a catalyst, and I guess Lennar was its catalyst yesterday. And you go to DHI, you will see the reason why it was on off the charts is because, it was technically ready or tight. Okay, you look here how when the home builders pulled back, it also pulled back, held the 50-day. This was one area where it broke above a lower pivot, continued higher, found some resistance, and then what did it do? It started trending higher, even looked a little bit better than Lennar, above the 8-day. So when the group got a catalyst, this is one that went with it. So at this particular point, hard to buy now, but it's I would say watch it and judge it. If it could stay above the 8-day, above this breakout, maybe even hold this 25, you'll know that this breakout's for real. Some other stocks in this group could potentially continue, and then maybe it'll even lift other sectors.
Right, we'll see if Pulte Group can continue as well. The stock closed the day up 2.7% about at 21.38, and the year's high is at the 22 level. It's getting pretty close to it. So with it trading above all key moving averages, is it likely to break out and get there?
Well, it's in the game. It wasn't as tight and doesn't seem as strong because when you have a few stocks in a group making new highs, and you'd have one that's not, it shows you it's a little bit of a laggard. But again, you look at the chart here, it's not like an extreme laggard where it's at the bottom of the range. It just hasn't broken out above the high here, and for some reason has very small days, nothing so exciting. It is above all the moving averages. It does seem like you can get through 22. So if the strong stocks that made new 2013 highs all of a sudden get another day, okay, you'll probably see some attention, at this through the pivot point of 22.
And KB Homes reports today the stock has been acting well, made a new high at 21.79 yesterday. What are the key levels to watch depending on how its results go?
Well, this one's already at highs. If you look at the chart here, they're anticipating a really good report. This, didn't wait for its own catalyst, used Lennar and used the group. So at this point, this could be a different type of catalyst. It can come out great earnings. It could gap up, and then they could sell it down, and that could cap a move for a while. So just got to be a bit careful of where these things are within their chart when they report earnings. So see how it acts after earnings.
All right, coming up, we're going to go in the trenches with some battered and bruised stocks that are starting to show some strength. First, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and talking about what Scott likes to call trash for treasure trades, stocks that have been battered and bruised that are starting to show some strength. Let's start with First Solar, which woke up yesterday, closing up nearly 6%. It has some resistance at the 50-day, which is coming up. So after 2 big up days, do you think the stock can get there?
Just to talk about the theme of in the trenches,
sure.
You know, treasures for trash, because if something, you violated your stops, you know, you didn't honor them, you didn't use sell signals, it usually goes into an investor's trash bin. And they're underwater, they hate it. You know, think about it, just like it's like, ugh, let me put it in the drawer, I don't even want to look at it, it's my trash. But then if it starts to act better and gives you a certain pattern that might create cash flow, it could be someone's treasure who's not involved, someone's treasure who could time it, because entries and exits do matter. And the first stock you just mentioned was FSLR. To be honest, you know, I think that this portion of the trade is somewhat over. You know, I got involved 2 days ago near the close because Charcoal pointed out, I was like, oh, look at this gap here from earnings. You know, this is when it came out, boomed, and then to the downside, none of us were really trapped in it, so it was an opportunity. So buying it here as it entered the gap in anticipation of yesterday made some sense. And now today, maybe down a little bit with the futures. If it were to get above yesterday's high today, you could fill a bigger portion of this gap. So overall, this was a nice tactical strategy, especially if you didn't get caught in at 37, why not try it down here at 28 for a move back up? Some might even try and short this when it fills the gap, so that could be potential also if it runs out of gas. So all in all, nice little gap fill trade.
And 3D Systems might have been in a lot of people's trash bins. It was stuck in a downtrend since late January. It broke below its 200-day on March 15th, but then had a red dog reversal, and it closed up almost 1% yesterday. So does it have enough juice to keep climbing?
Right now, it's like feeling its way out. It's got a bit of support. There was an analyst on CNBC that talked about how 3D printing is going to revolutionize the world almost. You could go read the article. But overall, off the charts, I have to give Vicky some credit also. She started to see some of the weakness in SSYS, Triple D, some of these well before. And now it feels like it's trying to, get some kind of support. So if you're not involved in it and it's not in your trash bin, maybe you got stopped out right here when it broke this triangle or wedge. Maybe you got out here when it broke this support going sideways and did it with some power. And then who knows, maybe you played this bounce and then once it came back and failed, you got out. But bottom line is you have a big time descending channel here. I know the other day I traded it for a quickie right around here and it couldn't get over it. I would say at this point for this to get better, it's going to have to get above this 30-30 with authority, and then perhaps you see some kind of retracement back to the 21-day and maybe even a bit higher. Overall, the group had a huge move over the course of the past 2 years. A lot of people love this technology. A lot of people think it's the next best thing. So this pullback is probably further than they would have liked. But again, if you were looking for a way in and you did not chase this excitement, this could be a decent spot. You could have a stop here at maybe 28-ish, and if it gets above 30-30, it can get in motion for what could be either just a bounce back or a new trend.
All right, and now BIDU also had a red dog reversal on Monday. The stock is acting better. It closed up 2.2% yesterday. Is this now one to keep on your radar?
I'm not that excited about this. This one
You always say this about BIDU.
I don't know why we always put on the morning show. The last time there was actually a shortable strategy, and that was when you had a gap down on earnings and we were looking for continuation. And if you look at BIDU, that was then. Okay, this was the range it was in, a gap down after earnings. Couldn't fill this gap right here, so then it continued to the downside as a nice short, and then it also broke prior support here for a little bit more, and now it bounced back a little bit. Okay, maybe there's some talk that China, the numbers are getting a little better. You saw them in the PMI. I don't know. I guess it could have a move back to 89-ish, and then if it were to reclaim the 21-day, perhaps it can get some better action. The stock has really been battered and bruised. You look at where this thing has been. It's been in ever since it peaked out here. Okay, in July of almost 2 years ago. It's just been slowly. And not even slowly, but it's just been grinding lower. And now when it's at lows, people like to try and bottom fish. So if you are going to try and bottom fish on BIDU, make sure it's just versus this level here, 83.35. And to me, again, it's not that compelling, but maybe you have a little continuation above yesterday's high to that 89 number.
You are not impressed.
Not impressed.
Well, dollar store stocks, Family Dollar and Dollar General saw a nice move yesterday. Dollar stores continue to attract price-conscious consumers in this economy, but should the stocks be attracting investors?
Every day, every dollar. There you go. And it's surprising what you can get in those dollar stores.
Yeah, some of them are really great.
Not that I shop there all the time, just on Tuesdays, but well, I've seen them and I'm like, oh wow, this is pretty cool.
Who knew you could get certain things at a dollar
every
store?
now and then on the way to Penn Station is a big Family Dollar, and if I'm a little early for my train, I walk in, I walk around, I'm like, $1, not so bad.
Not bad.
Anyway, if you use some of those dollars to buy the stock yesterday, you'll see that you had a clean breakout. Okay, and retail itself has been doing pretty well again. Okay, here is this little trend line that it broke yesterday. So at this point, I do think it's acting better. I'd like to see, yesterday was probably the day to be in it. I think Vicky had it on off the charts, and if it were to hold here, it can continue higher. You look real quickly at something like Target. There's cost consciousness. People love Target. I love Target. My wife loves Target. You like Target?
Love Target.
Okay, and here you go. Investors love Target. There it is at new highs. So this could help lead the group and keep people on the same path for higher prices and some of the other ones that look tight.
Now, do we love BlackBerry, which saw its first ignited move on March 11th when it broke out of a descending channel? Yesterday, the stock closed up nearly 6.5%. Can the strength continue?
This stock, people like to gravitate towards it because for like a $16 stock, it moves. It moves 30 cents, 40 cents. It could be, pleasurable or painful. I know yesterday it gapped up on the Morgan Stanley upgrade. At first it kind of went, and then I sent out a tweet. I'm like, as long as it holds above 1560, maybe it could continue. But it was definitely tricky. You look here at the chart. We talked about this well over the summer down here. Okay, when it had this long-term base, when this was a treasure for trash trade, and then you had a nice little bar here, and boom, and then we've been trying to figure out what's next here. I know that Sperling was looking at it right here for the excitement when it were to clear above this area, which it did. Then it held higher, and unfortunately, the upgrade kind of took away this trade. But overall, I would say now you have a new point of reference. The low here is 1567. The longer it stays above 1567, the more you can look for another trade when it gets over yesterday's high, and that is about, what's this high here? I'm a little blind, 1644.
All right, let's run down and do some quick hits here, starting with Apple, which has been acting better, but took a bit of a rest yesterday. What should we know about Apple heading into today?
What should we know about Apple? I would say that you had your first trade that was calculated above that 440. Okay, went as high as almost 460, where it saw the 50-day little resistance. And then over the course of the past 2 days, it's been digesting, but not falling apart. Typically since 700 or so back in September on the huge decline lower, after every 2-3 day bounce, it would just fall apart, and it's not doing it as of right now. So if you look at the chart here of Apple, you will see, here is that big downtrend that it broke above earlier in the week, which was a nice trade. Here's your 2 inside days. I do think the next day, I would say the next day or two is pretty important. Okay, for people to think if Apple's back, I think it has to hold above the last 2 days' lows, which is 48.50, and this one was an inside day above 449. So the longer we stay above this, the higher the probability that if we take out this 460, 462 with some authority, we can continue this move off the lows, perhaps back to some point at near the 200-day, because if you see where it came from, I feel like it was a nice trade, but in perspective, all it was from, like a 25-point move off the low, and this has come, 250 points off the high. So let's see if we can get a little bit more upside. Let's try, I feel like it's pulling teeth, but, at this point, at least he's in the dentist.
Love the metaphors. And Corning had a nice breakout yesterday. This is a stock John Darcy mentioned on Tuesday. He likes the fundamental story about this company. It closed the day up nearly 3%. So where might next resistance be?
I'll take a look, but it was interesting because he sent me a video on Corning and showed me like the Corning glass, how it looks like Minority Report. Did you ever see Minority Report way back when with Tom Cruise?
No, I missed that one.
Are you a Tom Cruise fan? Okay, anyway, Minority Report, it's got glass everywhere, and it's like computers on glass, this whole spiel. You should Google Corning glass or whatever it is, or it was on our site the other day, and it really looked like it's new wave. I think they make the glass for the iPhone 5, for a few other things, whatever. So he showed me the video, and I'm like, let me take a look at the stock. I'm like, look, technically it looks okay. If you look here, you will see that you had a nice tight range, okay, coming into this 13, and then boom, really nice trade. So I would say, a little bit of time above 13-ish. If it gets above yesterday's high of 13.25, no reason why it can't get back to 14 or so. And then what's interesting too, you look a little bit more long-term, you have this lower level, like almost like it's trying to like reinvent itself down here, okay, which it just kind of broke above. And perhaps this is the product that it could do to reinvent itself, because you go to the monthly chart, look where this stock was back in the day. This was a huge high flyer. Okay, and look where it is now. So who knows? If they reinvented themselves, this could be something you could throw in your drawer, let alone just have as a quick hit and a trade.
All right, and LinkedIn had a small inside day yesterday, closed at highs. I know you believe in this stock on a macro basis, but for the coming sessions, what are levels we should be watching?
I think at this time, it's slowed down. You know, everyone says, gets all worried when LinkedIn slows down, especially since earnings, because it was fast and furious. And at this point, it's basing, it's healthy, it's still above the 21-day. There's just not a lot of momentum. So if you want to look here at the chart to see when you can get another entry at this particular point, it is basing and it is above the 21-day. It's at a short term, it's at a small inflection point. Okay, because for active guys, they would love to see it go, get momentum, break out above this high. So if it's going to happen, it's got to get above this 176.20 with authority. If it doesn't and it stays here, maybe it needs more time to let the 21-day catch up to it, which it hasn't been near since those earnings. So it's been riding the 8-day. So something a little different is it's below the 8-day now. So let's see how it handles this 21-day to see if it can continue to have this upper level support.
And a new name for morning call, MODN, opened to trade yesterday at 20.30, well above expected pricing. What did you make of its action so far?
Well, here's the thing. Before I get to the chart, let me just get it over here. We talk about the art of the first day of trading, okay, a lot, because people don't know. I'm like looking at the screen and talking to you. It's a little rude, right?
It's okay, I understand.
I'm just trying to get to the spot that's important, okay? New issues are just their own animal, because everyone gets excited about them, because on all different time frames there's opportunity. So on the first day, the way I judge the opportunity of a new issue, I call it the art of the art of the first day of trading. Because we all know with an IPO, you have the selling group, you have the sales traders that are in there that get free stock, you have the good clients that supposedly get good stock, the whole spiel. So all in all, there's a lot of people along for the ride on this particular new issue. So, what you want to do is you want to measure how it's priced, you want to measure the supply and demand, and how you do that is in the first, 5 minutes to hour trading based on supply and demand. So typically, with everyone getting all this free stock, people sell it off the open, so supply comes in and you have to figure out if there's enough demand to support it. So what I do is, you watch it open up, usually it makes a quick high and then pulls in for a little while to absorb the supply, and then it turns into a nice trade once it gets above that opening print and stays above it, because then the sky's the limit. You never know where it's going to go. So if you look here at the chart, you will see that here was yesterday. Okay, let me see if I can make it a little bit clearer, where it makes sense and it's relative. All right, so you go like this. Okay, so if you were trading with us on the virtual trade floor, you heard us talking about it. Here is like the opening print, came up, came off a little bit. Didn't really wait that long. So for me, this 2070 was what I wrote down, 2070, 2072. Then it hung around for, not that long. I think this is like almost 2-3 minutes. So your first real speculative buy could have been when it crossed above this 2070, because that was my first small buy. And then I would say you'd put your stop in below this bar. Some would do it at the low of the day, which isn't even that much lower. And then what it did is it hovered within this. My next buy was when it went above 21, because what'd you have? A bull flag. Here's your pull, here's your flag, edging higher. So I added through 21. And then once you added through 21, first quick move, I took off, I think, like half into 21.25, as we talked about on the VTF, and then I held some, and then I think right into this little time period, right around 21.80, I'm like, you know what? Just caught $1 or so in this new issue, something that I've never traded for. I just used the art of the first day of trading and got rid of it. And then I didn't really look at it again the rest of the year, the rest of the day. It felt like a year yesterday. and that's the art of the first day. If it opens up here and then comes in and then never gets above it, that means they priced it wrong, there's too many flippers, it breaks below this area, and then it doesn't deserve your attention. But it didn't happen. This was a nice IPO, made some people some cash flow.
All right, fantastic. So what is your focus heading into trading today?
I think the day after the Fed day is typically interesting, because sometimes you get a trend day. So to maybe get a trend day after the Fed when we're in a crucial point, so to speak, within an upper range, it's interesting. So you want to see, again, if the home builders hang in there, if the banks could stay involved and get stronger. You watch Goldman, see what goes on with tech, see if that Oracle miss bleeds away at other names in that group or arena. I know for me, I started off the week with 9 longs and 1 short. Yesterday, I think I had 6 longs and 1 short, and then I left with 7 longs and 2 shorts. So I haven't done much except for make small adjustments and trade around positions, and it's been okay. So with that said, nothing has particularly changed so drastic, but you don't want to fall asleep behind the wheel, but you also don't want to have too many opinions.
All right, thanks so much, Scott, and thanks to you guys. Have a great day. Happy trading.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.